Okay, traders, good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 30th. Welcome to this last day of trading for the month and the quarter before we open up Q4. Great to see you in the room. Jay, Rohan, everyone in the room, great to see you guys. There's so much to go over. The dollar has just been on a tear. Now, I want to caution against highlighting resistance because for the last couple of days, it's been plowing through all those. That being said, we are coming in some longer term levels of interest on the DXY and on most of the dollar crosses. So on the menu for today, we'll hit DXY, Euro, Aussie. Got to take a look at Bitcoin, Sterling, Dollar CAD, SPX, the 10-year yield at resistance. That'll be accompanied with the dollar yen update and then gold and crude. Any other questions you guys are looking at, trade setups you want to review? As always, feel free to throw them on the message board at any time. Let's jump right in. So first off on BAT, we are just getting the release of the GDP figures. This is for the second quarter. The final read came in at 6.7 versus 6.6. Not expecting much there. The real event risk for the week comes in tomorrow, okay? Eurozone gets the core inflation read number, and the US gets core PCE, the personal consumption expenditure, the Fed's preferred inflationary gauge. So with all the talk about inflation, the comments we heard from Powell with regards to maybe inflation ain't so transitory, these reads are going to be important. And we're already expecting that we're going to see a higher read there. So that's on tap tomorrow. Here's what the DXY looks like today. Our focus a couple of days ago, or this was last night, was the resistance that we're approaching right now. So first on the weekly chart, guys, you can't make this stuff up. Break above 93.76, 93.88 was the resistance we were talking about. We probed into that last month. Here's the break. What do you want to see when you breach major resistance? Acceleration. It's exactly what you've got. Now we're in a larger resistance range. That's defined by the 38.2 retracement of the entire decline off last year's high and the objective March low. In case that wasn't enough, you got the close highs here for September of last year as well. So some symmetry there as we close out September trade. We're right at resistance. So it could probe a little higher, but 94.47, 94.65. This is the range we need to clear on a daily close basis, on a weekly close basis, excuse me, to validate resumption of the broader uptrend. Okay, as I noted in yesterday's piece, guys, we are broadly bullish. Okay, we were looking for the pullback early in the week, didn't get it. Okay, well, let me take you on the daily chart first. Here's what the daily chart looks like, and here's what it looks like now. So once again, the topside breach, here's the 2020 reversal close. We just spiked right into the bottom end of this and pull back. So the whole range is 94.46 into the 65 level. That's also uptrend resistance. So even if we get another pump into the close of the week, that's the level we need to be on a daily close basis, on a weekly close basis to validate the pullback, or to validate the breakout, excuse me, for the dollar. This is also an objective break of the yearly opening range. Here's your yearly open. High set back in March. You test the lows, failed. We again failed at the March highs. We at the August rally tried to close above, but we did just one day before reversing. If this is a break of the objective yearly opening range, should be looking for a fourth quarter high, which means there would be more to go. Okay, so here's what the scalp looked like last night, right ahead of that 38.2, that March low. We did probe into it in overnight trade. Okay, you're getting some near-term divergence here, price action with a higher high, the oscillator with lower high, both the reference points above 70, so a weak signal nonetheless. And this is a major inflection zone. We want to see what happens right here. Even if it breaks down to the downside, look for these parallels to possibly offer some support. I'm constructive above the 2021 high, the previous high at 93.72, but it looks a little tired. That said, if this does breach, we would expect to see a move like this. Okay, it would be a breakout type of trade, low tolerance level. Okay, we've been here once before. Here's what we did. So it really is the onus on the bulls to kind of pressure this higher. That being said, I think the immediate advance is at risk below 94.65. Ultimately, we'll be looking for a decent pullback to get back in for the DXY rally. If you're not holding longs already, unless this thing pulls back, and again, I got caught on this. I missed the absolute breakout on a lot of the setups we've been talking about. So it's been a frustrating week for me. Remember, we were holding euro short last week, like off the highs. In any event, looking for inflection here. Okay, looking for inflection here for the DXY. Core inflation numbers into the start of the month, into the start of the quarter. Then we got non-farm payrolls on tap next week. So lots on tap. Okay, so that's number one. Here's euro. Number two, a quick look at that from the top side down. Here's what euro looks like on the weekly chart, and here's what we highlighted last night. So the level that we had been talking about for the weekly charts, I'll take you back to the previous update back on the 27th, was this major key zone right here at the 2019 high, the 2016 high, and the 100% extension from the decline off the highs. So that's 1, 2, 3, gives you 1621. 1569 is that 2019 swing high. So this whole zone has been a major pivot in price. Forget 2016 or 2019 here, guys. Look back. It's the 2016 high, major pivot in price 2017. Here's the breakout last year. Here's support last year. Here we are. The weekly close matters here, guys. If we close below 1569, you're looking for a deeper drop. 1450, 1445 is the next downside level I have on tap. Maybe you look for a soft target near that swing high from March of last year. But the point is, man, you're risking another 100 pips down lower at least if this breaks. So kind of meshes well. DXY at resistance, euro dollar at support. See how this pans out. Here's the euro on the daily chart. So start off the week, again, eyeing this key zone of support. This was the basic 38.2 from the rally off last year's low. Here's a close low from last month. Here's the break and the accelerated drop. That's exactly what you want to see. Now, yesterday we closed below the November lows, and that's why for me, I was really hesitant on what to do with this yesterday. If that break is legit, we really should see this continue to start to accelerate lower. Here's what the actual scalp looks like now. If this is an absolute break, you know, it was encouraging that it held resistance overnight, but we would want this to really accelerate here today. So into the US trade session right now, guys, as we open up in the next hour, what I'm specifically looking for is this recovery to fail ahead of 1620. If this bounce fails ahead of 1620 to the US Open, the next leg lower, if this breaks, again, is the 15 handle. That's the 2019 objective high day close. So I don't know. I feel like it's been such a precipitous drop already that unless this starts to gather pace right now, this could be sort of a false break of the lows. You get a blow off recovery, it takes you back into like 1690s before you come off again. But I'd be cautious. If you're holding shorts, this is where you want to take a little off the table, start to get defensive with your stops. I want any recovery to hold 1621 if euro has indeed broken. But based on the weekly charts, we're at a big zone. All right, so a moment of caution, a word of caution on both the dollar advance and the euro sell-off. Both of those levels coming some pretty nice levels here now. This is null and void. There we go. Questions on euro? All right. That is number two. Number three, excuse me, and I wanted to talk about this last night as well because Aussie's been doing some pretty interesting stuff. Another one where it's the same red herring. It's like a flag, a warning flag that we are in euro. It's the same thing happening here with Oz. So if I take you back to the previous update, remember, guys, you can always find the weekly and daily charts in the previous update. I alternate the updates with with those accompanying charts, but here's the weekly. We were talking about 72.48, really big level for us. Okay, that was the near term 618 of the rally off the low. And again, this slope support, we broke below it, and look where we're trading. I'm going to just get rid of this, just to focus on this right now. Do you see where we are? We're still right in the middle of that down slope. Look at that. So I'm hesitant. I'm still hesitant, and I hate being hesitant. It's not a good thing when you're trading. Here's what the daily chart looks like, right? If this was a legitimate break, which we thought it was, 72.38, 72.22, excuse me, those former swing lows, we'd want to see an accelerated move. We did, but here we are, stalling. And if we look at this from the scalp standpoint, what I highlighted last night was that former channel. If you guys remember, we were looking at this channel. Remember that red one? Well, there's the resistance break. There's the test of resistance as support last night. So my thought process last night was, okay, well, look, we're looking for a possible exhaustion low off one of these two levels. If you're holding shorts, you want to see resistance here, bearish invalidation at the slope. If you're looking for new positioning, you're looking for possible exhaustion here for that last drive lower. So we've come off, inflection slope. The new channel is going to be that blue one that we're focused on here. That leaves room for another drop into 71.20, 71.38. That's key support for Aussie on the near term. So I'm flat on this one, unfortunately. Again, I'd be interested in actually fading weakness into this spot if we got it, or if this recovery stretches, if we get an exhaustion high, if we get some divergence, if we get a signal to short off one of these two levels, maybe that'll give you the last drive lower. But at the end of the day, I mean, some of these trades are maturing, quite mature at this point. So lightening the load, again, heading into the close of the quarter, heading into the close of the month, right? Heading close to the week tomorrow. It's not our best positioning, not our best environment, guys, to be actively scalping or intraday trading or aggressively in this market. This is when retail gets chopped up. So we want to be super cautious. No FOMO if we miss the move, which again, I missed the dollar a cent this week. You sit on the sidelines. Interestingly enough, I'll go over it. The one trade I've been all over is dollar yen, oddly enough, and I'll go over those levels in a moment. But even that one, I'm off now. I'm actually looking for that top side to possibly exhaust. It's been what, 6 days up or something. So I think dollar yen is actually one of the ones that I've been focused on the most. But before we jump into that, I do want to take a moment to talk about Bitcoin. So here's what Bitcoin looked like last night. I gave you the whole suite of what we've been looking at. Here is the daily chart on log scale. And I showed you yesterday both because when you look at it out in an arithmetic, right, it actually looks a little cleaner at this point. Now, when you take the longer term slopes, everything starts to get a little messy. But at this point, I just wanted to highlight this chart highlighting support at the 50% retracement, 40,778. And on the near term, all we were doing was this near term consolidation just above that 50% retracement. So that doesn't change. If we're following the 2018 parallel, which we've been talking about from the sell-off that we've seen there, again, it suggests you could see a lot of back and forth here with another leg down, more likely. That said, we're testing the upper bounds of that consolidation today. And if this breaks out, you envision a scenario where you see a larger recovery in Bitcoin, not necessarily marking the low, but certainly within the downtrend. You could see another upswing towards 44,685, 46,294. That's the March low. If there's another low to be going here, if we are going to make it down to 38.7, which was kind of the level we were talking to you about for the last couple of months, this would need to hold resistance. So near term, today's the US trade session, it kind of jives. If the dollar holds resistance, yeah, Bitcoin could see another breakout here near term. 44,685, 46,290, 46,300, maybe stab into the upper parallel. I wouldn't want to see it into the 618, but this is Bitcoin. You get a lot of false breaks, you get a lot of throwovers. So, keep that on the menu. It looks like it's happening earlier than we expected. But that was the cautionary note from yesterday. If we do get a topside pop, those are the two levels to look at for possible exhaustion. Not out of the woods yet until we clear this slope. Now, what's interesting is you're still seeing people, there's talking heads on TV talking about people using Bitcoin as an inflationary hedge. It puts a little bit more interest in tomorrow's PCE read, right? The core personal consumption expenditure. That's the best inflationary gauge the Fed looks at. So maybe that might prompt on a higher print some strength here. But I'm really interested to see how this reacts based on that call. I personally don't think that's really the call we're seeing here. That Bitcoin is taking the inflationary hedge trade. We could just look at it objectively, what price action has been doing. But that being said, tomorrow's the best inflationary read you got. Let's see how this does. If it breaks higher, guys, look for those two regions for possible exhaustion on the Bitcoin rally. Ideal scenario is to get along off this zone if we get a drop later this month or next month. All right, that is Bitcoin. Any questions on Bitcoin or any other I don't know if you guys are trading any of the cryptos. Ether is in a similar scenario, but we'll keep that for another day if no one's trading it. All right, next up on tap, British pound. Here's number 5. So sterling is definitely making the headlines, one of the biggest movers this week. Massive decline coming into some pretty stellar levels. So here's our last update on the British pound. I'll get you the last update that we noted here for the weekly charts was right here. What we were talking about was the fact that, hey, we're testing upslope support in red, especially this year with the drop that you made back here in July. One test, August test, here was another one. So right into the start of the week, we were saying, or right into the close of last week, this looks like we were saying, watch that support zone. If that breaks, the 2017 high we closed at 34.94, basically looking for slope. Here's the break, guys. Here's the plunge into slope right into the median line before pulling back. Let's see how the weekly close reacts with relation to 34.94, which is the 2017 high week reversal close. Been a major pivot in price ever since that yearly close. Let's see how the weekly close reacts towards this. But the intra-week levels have already reacted to slope. So you take this into the daily chart and see what we're doing here. Not as clean. Okay, so here was the last daily chart that we highlighted back again last week. Here is the big support zone we were looking at. 2 key levels, the February low and the 2018 open. We've broken both of those. Now looking for resistance up here. This is the objective yearly lows. We closed below it yesterday. Technically, that would be bearish. So let's say we just dump this, right? This rally should fail. First level of interest 35 needs to fail ahead of 35.67. Next downside levels, you're looking at the slope, 33.70s. The 100% off the high gives you 33. So the levels are exquisite. The drop, again, looks kind of spent right off the oversold territory. Here's what it looks like or here's what it looked like last night. Or excuse me, this was back on the 23rd, back on that recovery. There was the bounce. We were looking for exhaustion off one of these two levels. That September open was the high. Here's what it looks like. Boom, and we just tanked. So really clean price action. There was the close of the week. Into the open of this week, another rally. Stop against that high was a really decent trade setup. First target, second target, third. Didn't think we were going to get anything beyond that. Here's the break. So here's my problem with sterling. If this break, what do I always tell you, of downtrend support is legit, oftentimes the sharpest part of the decline. This rally needs to fail again at 35. If this immediate decline has more to go. Right? Now, British pound, notoriously professionally traded market. If we were to close back above this zone, I would discount that as a false break. You could still move lower, but it's going to be within the confines of the trend again. So on this immediate break, we need to see resistance at 35. Next downside level, 33.04. And just let me tell you, just from talking with guys around the city, excuse me, I'm losing my voice. There's a lot of apprehension with this because there's been a lot of players on this trade, and it's getting too loud. Where when when a whole bunch of guys that were all, we're all traders in the city, guys. We've been trading these markets for almost 20 years. We throw around ideas all the time. We're tweeting, we're IMing, we're teamsing, all that good stuff. When there's so much consensus, I started to get concerned. And Sterling in the start of the week on the breakdown, all of a sudden everyone was pointing that, oh, look at Sterling, there's more to go, there's more to go. I think that trend, that near-term wave has matured again, starting to get really loud. I'm starting to hear people that aren't usually on the right side of the trade starting to advocate for the Sterling short. And that's my signal that, the immediate decline might be tiring here. I know it's counterintuitive, guys, but this is just over the years. This is kind of what I've seen when the magnitude of the chorus starts to get, oh, Sterling, Sterling, Sterling. That's usually when the trade is over. Okay, no one's jumping into a short right here and making money. So I do think you get a little bit of a whiplash here. 35 for me is the technical barrier that we need to hold, but it's too clean. You know what I mean? If we spike higher right into the February lows, and then we kind of pull back, fine. That still could be a decent play, but the immediate decline, I think, is a little exhausted here. So I'm looking to find topside exhaustion on the Sterling rally if there is more to go. If we settle today above 35, I'm flat. Okay, I think you could see a larger recovery at that point, and we'll look to short that. But heading into the close of the month, heading to the start of the quarter, yeah, I'm not going to jump on a short trade that's matured this much. All right. So that is Sterling, number 3. Decent price action. Let's see how it reacts as we head into the close of the week. Dollar CAD, number 6. Here's Looney. So what's interesting about this trade is despite the dollar rip, right, across some of the other major counterparts, dollar CAD's sort of been rather timid. A lot of this, a lot of people are attributing to just the broader strength that we're seeing in the underlying oil markets, which is kind of putting a cap on CAD weakness. That's dollar CAD strength, and I could see that argument. But I just wanted to highlight the weekly charts. We're really not out of the mess yet. This whole chop fest that we first highlighted when we reversed, right? The high we closed is 28.22. We started to say we're looking for a range break at the high we closed and that channel, and we've just been consolidating ever since. Again, here's the close, right? So I do think still a broader breakout here is pending. I don't think we have the validation of one way or another yet, but that's the weekly charts, right? Here's the daily charts, and here's where things are a little bit more interesting. So you can see that consolidation starting to sort of crunch. This is Aussie, sorry about that. Here's dollar CAD. This is the last update. Here's the monthly open that actually held support with an outside day reversal. I highlighted this earlier in the week, which kind of gave us the indication of, okay, that's a blow up. That's a really nice indication on the lower end when you see an outside reversal to the upside at the lows. Those tend to be decent signals. Here's the rally, again, exhausting, just above the monthly open, the yearly open. So the daily chart doesn't have much here. I mean, you're not near resistance, you're not near support, you're just above the yearly open. Here's the scalp. And this has actually been kind of clean. Did I not have an update on dollar CAD? This 28th was the last update. Okay, this was the last update. Oh. Here it was. So we highlight this fork for which if we do break out of the yearly open, 50% retracement was the first target. More critical was confluence resistance, uptrend resistance, and that's 618. We turned 3-4 pips ahead. The high registered at 27.75. It was at 27.80, so 5 pips. Here's the pullback. If this support holds, yeah, you can still see a stretch into the 618. Key resistance is the high day close. but I mean, it's all dependent on this support holding. Again, guys, you're hearing a lot of reluctance in my voice because of where we are in time. At that close of the month, close of the quarter, I just, I tend not to get very active. So if we maintain a stance above 27, it's supportive. The broader trade is still constructive above 26.44. That's my concern, that if you get the washout, even just a test of the weekly open would take you all the way down here. The other base case scenario, if you buckle below 27, is the 618, which comes in just ahead of that at 26.60. So if this breaks sort of the level, I'd look for new entries. If this holds, the high day close is still 28.22. That's dollar CAD in a nutshell. Here's the daily chart looks like. Again, we're right in the middle of the range. That's where the lack of confidence comes on this one. But the near-term slope looks pretty clean. Questions? All right, let's take a quick segue here into the SPX. So, I lost my area here, 28th, that's still here, let me bring this back. So here is what the SPX looked like a couple of days ago. Someone in the webinar, I think it was one of you guys on Daily Effects webinar, was asking about the weekly chart, so I gave you the whole suite. Here's what we're looking at with SPX. So the weekly chart looks like this. So this would be the first break of upslope support. I want to say this year. Okay. All of these parallels have continued to be so fruitful. These are all parallels off of this basic advance, right? Parallel support. That support again. This is the first break of uptrend support. If we get a close this week, that's what we're focused on. Let me just get rid of this. So you're seeing momentum. That's the break that we got a couple weeks back below 70, which is a decent signal in and of itself. Here we are sitting at the lowest momentum reads we've gotten for the year, guys, on weekly RSI. You can't make this stuff up. Here's your yearly open. So weekly RSI has never sloped sub essentially 60 since the start of the year. If we close this week below there, that is important. That's technically significant. So red flags, right? Starting to emerge for the possibility of a larger turn here. We're not there yet. The confirmation is not there yet. We still are, for all intents and purposes in the uptrend, but boy, things are getting interesting. Here's what it looks like on the daily chart. So a little bit different of a slope series. This is the basic original slope. Here's the parallel, one touch. Again, here's another slope, parallel, one touch, two touch, three touch. Look at that slope zone. Break, test as resistance, and we're back at the lows. What does that tell you? What does that tell you? Now, the levels of support that we want to put into focus, so the key levels, 43, 56, that's where we bottomed. That's now the 100-day moving average. That's the low day close for the month. That's now near-term support. You need to close below 43.34 to suggest that we got a deeper correction at hand. So again, for me, it's all about this pivot in price. For SPX, we're sitting right at support. Here's what the intraday chart looks like. Okay, so again, guys, here's just side by side how that played out. Right, the rally pulled right back. Here we are bouncing last 2 days off of that support. Here is what the intraday chart looked like as we grounded into the low day close. Rallied off that into that resistance zone at 44 that we talked about. And here we are pulling back again. I don't think this gets too much deeper on this thrust, but I can't, what do I want to say? We're looking for another exhaustion low, looking for a lower low. I don't know if you get down to complete a 1618 extension, that'd be too clean in my mind. But if we get into the 618 at 43.34, I do want to see what kind of reaction we get there again. one other thing. If this is a 5-wave sort of decline, or the makings of, and this is wave 4, the corrective stance on that, real near-term stuff, would suggest that's the 100, which is another reason I'm looking for, oh, maybe that does hold. No, 1618, there we go. Maybe that does hold, right? If it doesn't, the 1618 is still 44.26. So the basic premise is I'm looking for exhaustion high for one more exhaustion low. Ideally 43,000. Don't know if we get that low, or 4,300, but that's such a key level for me. So that's my take on sterling, or on the SPX, excuse me. Questions? All right. Before we jump into dollar yen, I did want to just take a moment and talk about the 10-year, because this is also making lots of headlines. Guys, the levels couldn't be clearer. We are, we talked about this early in the week, that was a clear and objective technical break, period, end of conversation. The levels we highlighted was 143, and the key level was 152, okay? Now, we did close above 152. We're straddling it now. I do think inevitably this is going to break higher. You're constructive above 143. Your next level up is 162. That's an equal 1618 right off the low. All right. So this shift, sell-off in bonds, rally in rates, is essentially would be interpreted as more of a sort of risk-on environment, but you're not necessarily seeing that, right? We just talked about the SPX. Risk is still, yeah, risk for a bounce here, but we still could move lower. So an interesting dynamic happening in the market, guys. Again, I don't trust anything you're going to see over the next 48 hours because of that quarterly turnover, monthly turnover. Not the best time to be implementing new positions. So if you're not holding anything, stay nimble. If you are looking for, or if you're holding something, this is where you want to get protective. Again, moving your stops in, all stops to break even or better. And look for those limits to be very well defined here, because we're at major inflection zones on the dollar, on the euro, at rates, right? Hell, for the SPX, right? At support. Everything's at sort of a nice inflection right into the close of the week, right into the close of the month and quarter. Quick look at this. I just want to show you that the VIX is continuing to, play nice. We talked about that breakout last week. Buckled back below, here we are again, actually testing that slope of support. I'd like to see that VIX really continue to trend higher over the next couple of days. And I think you're going to get that with the volatility that we're seeing as we head into the final quarter. Last but not least, I do want to go over dollar yen and gold. So before we hit gold, here's dollar yen. So believe it or not, I actually made money on this on a short yesterday after we failed, or earlier this week, I should say, after we failed here. It was the turn. I took a quick stop against the high, and my first limit was at the channel, so it was like a 15, 16 pip gain. The second limit was here at uptrend, former uptrend resistance turn support, and then my third limit was down here. I got stopped out at break even on this last rip. I'm thinking the same scenario here. Now, again, I'm not one guy who's going to encourage you guys to counter trend trade, but this trade is so mature. Here's the daily chart. 1, 2, 3, 4, 5, 6, 7 days up. Give me a break. We've seen that before, these types of rallies, but when's the last time we saw 7 days up? Was right here. Was right here. Was right here. All 3 out of the last 3 instances of 7 or 8 day declines saw decent pullbacks in price. Not just that, stop traffic. We're at resistance, big resistance. Here's dollar yen on the weekly charts, guys. The 618 retracement of the multi-year decline off the highs we made in 2016, that late 2016, 2017 high. Here's the 618. The 2020 high week close was in there. The 2019 high week close was in there. And that was all 1116 to 1198. We're still there now. Okay, so again, I don't want to sit there and try to counter trend just because it's at resistance on the near term. I'm looking for those exhausting sort of marks. If we close today below 70, that is encouraging. A break above 70 in dollar yen can last for months. Don't take my word for it. It happened just this year through March and April. So at resistance, we're 7 days up. On a very well mature advance. The monthly opening range break was clear as day, calls for a late month high. It's the 30th. Can't get much clearer than this. So I'm looking for just an exhaustion pullback in dollar yen. I think the broader trade is still constructive while above 111, but this is a big, major technical area of resistance. Here's dollar yen on the intraday chart. And here's what it looked like on our last update. It was right here. Okay. So here's our last update as we were treading water into the 2020 high day close. And what do we say? Even in that report, we said if this breaks, it's likely to be another accelerated rally. Guess what? 111.60, 112 made short order of that. Here's the breakout test, support. We're back at resistance. Now we just posted a 2-hour reversal. I was hoping this would be a 4-hour outside reversal. It didn't actually end up being a 4-hour outside reversal, but the 2-hour did, right? So I'm favoring, if we get this exhaustion print to continue to hold into the US Open, stop against that high for a decent pullback. If that materializes, 111.60 still your near-term support. Anything below that, tack on a quick retracement and look for the 38.2. If this high holds, again, this is just for argument's sake, if this high holds and we buckle below that, the 38.2 converges right on the median line. And again, that's 111, 110.98. So wouldn't be aggressive on this. It'd be a half X ATR trade, but this would be a really nice spot if we do get the pullback in dollar yen. Rohan says, does it drive with a bit of recovery in risk? Yeah, I would think so. I would think so. Although, this has kind of been marching alongside yields more so than risk, right? I'd be looking closely here at yields if you're looking for dollar yen specific comparable price action, Rohan. At the end of the day, yields higher and markets lower. It doesn't kind of make sense. All right, last but not least on my list is gold. Here's what gold looks like as we tread water into support. And I got nothing for you here too, guys. I got nothing for you here. We have looked at the slope in a couple of different angles, a couple of different ways using, the pretentious lows we got there in March. And I'm just looking for the weekly close here. Again, I was looking for a bottom, favoring that gold pullback to find a little bit more of a stringent support here. Look at gold for the weekly charts. I mean, this is all where it comes from. 1738 to 618. Even intra-week, the spike turned right ahead of just a parallel we've been watching, right? Even if you push this to the highs, looks like we were just there, right? At the end of the day, we're looking for the weekly close in comparison to 1738. If we close above, it's been a 4-week decline. Yeah, I think you get a little bit of an exhaustion pull. So is this the start of something? There's not enough validation to suggest that yet, but here's the near-term charts. It's just messy. It's just messy. Here was our last update on gold. Here's the start of the week. And I was telling you guys, the ideal scenario is for a breakout above this to play the recovery, or to drive into this key support to try to play along. Well, we drove into that key support, we drove lower, and we're just treading water in here. There's divergence into that low. I don't think the break, this is a key level where if I think we broke, you should have been an accelerated drop. So I am more of the mindset that this is going to, I don't know if it's going to break out, but it's at least going to take us for a ride back into slope resistance. You know what I mean? Oh, forget this. So I think the risk for an exhaustion low. Again, intra-week, let's say tomorrow, we get those PCE numbers and it really offers a massive move. The ideal scenario, yes, Jay. Did you just ask that? Oh, okay, I read too early. Catching the low, which extension are you looking at, Jay? My ideal scenario is that this catches a low, a 786 retracement. What's 1710? There's another level there for a reason. It was a low day reversal close back here in April. It was an outside reversal. No, it was an outside day, but it wasn't a close above. So 1708, the 786 retracement, that converges on basic channel support. So possible area to find more meaningful support. I'm not sure which extension you're talking about, Jay, if you want to tell me what reference points you're looking at. If you're looking at this, that first leg down, the 618, yeah, it could be catching the low here. I see what you're looking at. And 1751, possible. I don't like that this closed below the low day close from August. That to me was problematic. Now again, it's the close of the month, the close of the quarter, the open of a new. If we were to pivot and close back above this, I do think it would alleviate that. But man, it's just looking tired. It's just looking tired. So that's my take on gold. Again, from the weekly charts, it behooves us to be more cautious, looking for the low. Okay, that the decline is again, it's been multiple weeks. We're back into major multi-year uptrends. I do think you risk that exhaustion low in gold. All right, and that, to your previous question, Rohan, would actually bode better for the recovery, right? That the gold trade starts to recover because you're seeing risks start to turn over pretty abruptly. All right, so guys, that's all I've got. Let me know if you have any other specific trade questions or setups you're looking at. I would encourage you all, if you don't have any positioning on, honestly, call it an early weekend and enjoy. I don't like trading these periods into the quarterly crosses. Now, if something does come up, I will give an update tonight. As of now, I'm not planning on doing one, guys, because again, it's just not, I don't see anything here attractive that I want to get involved in right before PCE into the open of a new quarter. So by my part, I'm all right kind of sitting this out to the end of the week. If something does come up, I will throw an update on tonight. Use caution, okay, especially into the close today, because we have those quarterly rollovers tomorrow and the PCE numbers right into the open of US trade. Is likely to offer some volatility as we close out the week. So use some caution there. All right, and if there are no other questions, we'll go ahead and wrap it up there. Guys, have an awesome weekend. I will see you all on Monday morning for the free session on Daily Effects back here on SB Tuesday and Thursday. Best of luck trading, guys. Cheers.